Okay, guys, welcome back. This is the second episode of the Micromath podcast. We're on the hunt, as you know, for stocks trading under $1 billion. We love disruptive sectors. We got a lot of cool companies to talk about. And as well, we have some breaking AI news that we're going to get into. So, Declan, Mr. Fundamentals, we were talking about Aehr test systems last week. If you guys didn't see our last episode, go check it out. We'll provide you the link. But this is a company that tests semiconductors. So if you've heard anything about AI, you know semiconductors are a core, absolutely critical piece of technology. And these companies basically test these systems to try to find, early breakage or defects, things like that. Since the pod, Mr. Fundamentals, correct me if I'm wrong, I think the stocks jumped to roughly 17% at its peak, even higher. Did I get that right? Yeah. You found this stock. We've explained it in the last episode, but maybe Declan, you want to go over what's changed since then? Why is the stock going higher?
Yeah, so right after our episode, they came out with several announcements as well as their fiscal 2024 results, and they overall came out quite promising. So net revenue came in at 66 million versus 65 last year. They also recorded net income of 33 million versus just 14.6 million the previous year. So financially speaking, things are up. On top of that, they just announced another deal for, I think it was about $12 million to supply, again, these testing kits for electric vehicles within the silicon carbide market. And then on top of that, they decided that they're acquiring a company called Incal Technology. So this will allow them to further penetrate the growing AI semiconductor market, which is obviously very exciting. So a lot of recent developments that are showcasing improvements in the business overall that I think investors can be quite pleased on.
I'm always happy to see when a company focuses on their operating expenses. You see right here, revenue, it's up, but barely. Like we're falling out of growth stock territory almost. But to see their net income jump double basically shows like a lot of cost control from management. And I think that's what investors need to see right now. There's just too many years of spend and grow at all costs. That ship sailed. That strategy is not work with investors anymore. So to see these guys have a real focus on cost controls is very refreshing. Good job to you, Aehr Test Systems. I haven't spent too much time looking at their acquisitions, so I can't really speak to that. But this was a company we were already pretty excited about from pretty much any ratio you look at. These guys were a good financial story. And sure enough, it was 2 weeks ago when we recorded this podcast, and it's nice to see such a quick win already. Did you have any further kind of thoughts on Aehr Test Systems, or should we keep it moving?
Yeah, well, I was just going to say one final thing towards the actual acquisition. I think this kind of showcases that the testing market is quite broad and is going to be overall quite enduring. When you look at it, they can supply and help out electric vehicle markets, AI markets. And the reality is that semiconductors aren't going anywhere, and you're going to need to continually test them. This market is not going to disappear. And so while there's a lot of hype and excitement surrounding AI, this is a business that may fly more under the radar because of the market it operates in. But at the same time, it's truly establishing itself as one of the key players in this market. And that means that it's probably going to have a quite sustainable business model over the long run.
Fair point. And hey, picks and shovels, probably the most overused buzzword, but like it's there for a reason. There's a lot of people very critical about these AI investments from the large, Magnificent Seven. They're spending an unbelievable amount of money. I think it's in the trillions now. Like it's at least $1 trillion, like it's a ton of money. And where they're going to get that money back is so far from clear. Think of how much money Meta is spending on its H100s from NVIDIA what's the functionality right now? You can go and generate 3D images of you and your friends like on a spaceship, or you know what I mean? It's going to increase the time spent on app, which fine, you could argue is good for advertising, but generally it's a very expensive play toy for the time right now. But NVIDIA is killing it, picks and shovels. Aehr Test Systems, killing it, picks and shovels. So just like you said, it's a business model that makes sense. It lowers the risk of AI. You're still playing in the market while you're not the one taking these massive risks. You're just part of the ecosystem of this risk taking, this expensive risk taking. So good for them. July alone, stocks up 68%. Clearly, investors are starting to pay attention to this. Lots to like on this, and it's something we'll be keeping up with for the foreseeable, I'd say. Declan, let's talk about small caps. Finally, after years of just torture and pain, we're seeing indexes like the Russell 2000 finally catch a bid. In fact, over the last month, they've outperformed their large cap peers. This is good news. We're not seeing the same kind of run in the microcap area. A few stocks, like we've got a few that we've talked about on this podcast and in our newsletter, Dynacert, Alaska Energy Metals, Tenaz. These are all hockey stick charts straight up over the last couple of months. So finally, there is action. We love to see it. Do you want to talk a bit about why small caps are coming back to life? Where's this even coming from?
Mm-hmm. Well, as we all know, the Magnificent Seven has had a heavy concentration in top indexes such as the NASDAQ and S&P 500. And so because of that, this AI hype has really driven those indexes up overall compared to these other smaller indexes. But what I think we're starting to see, and this really ties into Aehr test systems, ChatGPT, OpenAI, all these businesses right now, is we're kind of reaching the peak of that development cycle. Like you said, all these big companies are investing heavily in building their large language models, but we're kind of starting to see these marginal improvements. You know, they come out with their new model, say Llama just came out with 3.0 versus GPT-5 is on the way and these different things. But when you look at it, they're only making these small improvements overall. So I think that spending cycle is starting to slow down. And that you can even see that reflected in Aehr's revenue overall. I think in this case right now, we're starting to see that shift where valuations have kind of reached a peak and these overlooked opportunities in smaller markets are starting to gain recognition because the big markets or big investors and institutions are starting to realize that valuation may look more attractive in these smaller areas.
And the thing with small cap stocks is there's kind of two main things to look at. It's one, risk taking is what's the appetite for risk. So generally speaking, smaller companies, more room to grow, but a lot more to prove. They're not proven. They don't have a long track record. Often they're in new, interesting industries like AI is one example that just has a lot to prove and a lot of question marks outstanding. So one, when interest rates come down as they are now, finally, we just got another rate cut, and that's massively positive for high risk assets. We can get into the details of that, but long story short, if you're looking at cash flows out into the future and interest rates are high, you know, you're less interested, like money in the future is not worth as much when interest rates are high. When interest rates come down, future money is worth more today. So valuations usually increase because of that. That's the first thing. Second thing with small caps is they're usually very focused on a specific geography. So the S&P 500 Magnificent Seven, their revenue, those companies come from everywhere, all over the world. An American company, but barely, you know what I mean? When revenue comes from the whole world. When it comes to small and micro cap stocks, those are usually companies that are focused on, let's just say the US or Canada or any other market, but one solo market with maybe a little bit of ancillary revenue from international markets. But it's really a barometer on the health of a local economy. When the US, you know, we're looking at an election that's going to put in a more, I guess you could say, pro-business candidate or president. You're looking at interest rates, seeing interest rates come down. Just years of pain that have just forced people to kind of relook at their own balance sheets and their spending habits and stuff like that. So you're starting to see this environment that could be more pro risk assets. Bitcoin rallying, that's a risk asset, though you could argue it's, there's other reasons for holding that, but generally I'd say it's a risk asset. So those are two kind of things that are coming together at the same time that make small caps look attractive. We've seen it in the last 1 month chart. Where we go from here, I mean, at this point, I'm sick of trying to predict the future just because of how freaking hard it is. We mentioned a few times ChatGPT in that little intro or in that section there. So maybe that's a perfect segue. SearchGPT was just announced. It's scaring Google investors everywhere. Google owns the search market. Everyone's used Google where you type in a search, it spits out a list of potential sites that can send you on your journey, finding the answer for yourself. SearchGPT is brilliant because nobody wants to find the answer for themselves. They just want to ask the question and be given the best answer with references. And that's exactly what SearchGPT is going to do. So Google dipped 3%, which, you know, small cap land doesn't sound like much, but when we're talking about one of the largest companies in the entire world, 3% is a gigantic loss in market cap. So talk to us, Declan. What else do you know about SearchGPT, and where do we go from here?
Mm-hmm. Well, I think when you look at this, the big thing here is this is not so much a huge value add to OpenAI per se, but more so a threat to Google's enduring competitive advantage in the search space here. And this is just another demonstration of how these AI tools are challenging some of these old Web 2 industries or markets. And in this case, Google will likely be building its own model of this for its search engine browser. And so the matter of, I think the big question here for me when it comes to OpenAI and ChatGPT and ultimately SearchGPT is, what platforms are these going to be implemented on, and who's going to choose this over the standard that is Google? Do I think Google's competitive advantage is fully threatened by this? No. Will it certainly open up new opportunities for companies to come in and offer an alternative? Yes. But I think when it comes down to it, quality will kind of preserve itself in the end. And that, on top of just how well OpenAI can sustain itself, Google is a $50 billion profit-based company, whereas OpenAI is still trying to figure out how to keep the lights on. So it'll be interesting how it plays out, but I think it clearly raises the alarm bells for Google.
Yeah, I can imagine. And when you look at the numbers, even a tiny percentage loss in market share for their search product would be massively negative for their business. But even a tiny piece of that business is a huge business for any company that wants to come and take it. Just like you said, OpenAI, they lose money like crazy. They're investing money like crazy. It is anything but a proven business. Somebody told me that even like one small query uses like a water bottle full of water in the data centers, and the amount of electricity is insane. So it's like, though we see this efficiency, because to us it feels efficient, you get hours and hours of analytical work done in 2 seconds, but the actual cost of it is way higher. But we're not seeing that yet because they're subsidizing it for us, just like Uber does when they try to claim market share. They'll sell rides at a loss just to gobble up market share, only to increase the price in the future. So mark my words, the price of OpenAI, or of any of their products, is going to be going way up in the future. Back to Google though, yeah, they are trying to compete with this. They had a wildly embarrassing fall on their face with the release of Gemini. It was showing what George Washington was like black or Asian or something, and just things like trying to be woke and diverse and all that. But when you're looking for a factual answer for something, you don't want like a politically correct answer. You just want the answer. So I think that was hilarious. Will it hurt them in the long run? Probably not. Did it help OpenAI? Yeah, for sure. So curious to see where this is going to go. But I mean, at the end of the day, people don't want to find their own answers if a system can just give it to you. The thing that I wonder is, historically, OpenAI and any of these other large language models, they're based on historical data, right? Because they have to learn and spend lots of money training these models on old information. How are they going to get real-time data? I don't know, because that's what search is all about. If I'm asking, what channel do I stream the Edmonton or watch the Edmonton Oilers game on? Well, I don't care what channel it would have been years ago when they weren't in the playoffs. I need to know now. So I don't know how that's going to work, but I mean, we can only wait and see. I haven't even used the product yet, so I'm curious. Mm-hmm. Have you tried it? Have you seen it anywhere?
No, I think it's still in prototype phase right now. So I think it's open to a small beta group at the moment, but again, it'll be one of those things that when it comes down to it, it's still an LLM. So it's still going to probably have the same fundamental problems that have existed, no matter the size and scale and little investments and improvements that are made here. So I'll be curious, to your point, if you're trying to search up something, is it going to give you the most accurate real-time answer, or are there still holes in that large language model, and will it produce hallucinations and the like? So curious to see if ChatGPT, OpenAI has cracked the code, but I'm a skeptic in that regard.
I mean, they're going to have to do some kind of inference where they're training these models. No, not training. They're basically able to mimic how a human looks at situations and reasons. And they are active in that. I, for some reason, thought OpenAI was only focused on the large language models. They actually apparently have some inference initiatives going. We've talked so much about Versus, and I'm actually going to try to get Gabe on the show here. I want to talk about this. It's been a long time since I've had a chat with him, but if you are not familiar with the difference between like these large language models versus something like active inference, it's worth a Google. We'll talk about it more at another time. That's a whole, Declan, you'll get too excited and that'll be the rest of the podcast. But I mean, that's something I'm really curious to see how they tackle that real-time info problem. We'll see.
Yep. No, certainly exciting. I love the developments, and it's hard to be a hater when you just see so much innovation in the space. Like, it's cool. And as consumers, you get to benefit from all these products. So keep the competition rolling, let these businesses duke it out, and we'll see who comes out on top in the end.
Yeah, I don't care if Meta wants to spend all this money on building some apps that entertain me and I don't pay them for. I'm okay with it. I'm not an investor.
Exactly.
I'm going to make the biggest pivot. There is no good logical way for me to segue into the next discussion, but it's a company we've talked about before. We've written about them. Tenaz. It's an oil and gas company. Specifically, they focus on exploration and production assets in Canada, assets in the Netherlands. It's an international. They're looking to acquire more things internationally. It's a teeny tiny micro cap company we've been following for. Honestly, I think our first article was in 2022, actually. So it's been a long time since that this has been on our radar. And I remember almost didn't take it seriously at first. It was this little $50 million market cap company that had net profit. And right away, it's just like, what? Like cash flow on like a baby micro cap? Like I've just never seen that. So I was pretty stunned out of the gates. We wrote about it, looked into it a lot more, have fallen more in love with the company ever since then. It's had an amazing run over the last couple of months. The chart is straight up and to the right, exactly what you want to see. And there's so many things to like about this thing. Declan, I'm throwing it right over to you. You love this company. Why don't you tell us a little bit about what these guys do, and then we'll dig into some of the stats.
Yeah, no, absolutely. Well, when you look at this company, I think the big thing that you need to understand and dive into is the actual management team and who runs the show. So Anthony Marino, their CEO, he seems to be a very Buffett-esque type manager overall. When I look at him, for one, they own about 11% of basic shares outstanding, 21% of fully diluted shares. But where I think his true expertise shines through is his acquisition capabilities. It doesn't seem like he is willing to overpay for an asset, and he will continually look for opportunities and only jump fully in when something looks super attractive. And as I'm sure we'll discuss here, their recent acquisition, it just really showcases his abilities and willingness to dive into new markets and capitalize where the opportunities are the highest.
Yeah, exactly. And so this is somebody who, it took me a moment to connect the dots, but back when I was working at BCIMC, which if you're watching, you're not familiar, it's a gigantic pension fund. I think it's the third largest pension fund in Canada. I was on the equity team, Canadian equity team there as an analyst. And I remember Anthony's previous companies, Vermilion and Baytex, and these were very successful companies, very popular at the firm. And this guy's going for a third round. Actually, I think it's even his fourth, if I'm not mistaken. Proven track record. Absolutely. Skin in the game. Absolutely. Focus on, just like you said, Buffett-esque. Great way to explain that, because very focused on cash flow, fundamentals, risk, like the downside risk is super important to them. It's all the boxes you want to check for a company like this. So it's super impressive. Yeah. And you mentioned skin in the game, 11%. Or 21% if you look at the diluted shares outstanding. That's a good, meaningful chunk of skin in the game. If the stock goes south, they go south with it. And you always want the management to have a bigger stake than you. I think that's kind of the key thing here. But pretty impressive. Generally speaking, in the global scale of things, they're a small producer, but they're a smart producer. So we like that. All their ratios check out. This is a real company with real earnings, real cash flow. We love that. After our article, after I think it was the initial or the second article, we actually had their investor relations team reach out to us, which was really cool. So we had a direct line of communication. Kudos to them. And we are trying so hard to get the CEO on this podcast. That'd be wicked. So Tenaz, Anthony, if you're watching this, please come join us. We want to ask you questions and get you in on this mix and educate our audience. So please do it. We are going to keep bugging you until you do. So what do you think? Any further thoughts on these guys? Like, what kind of stands out to you aside from the insider ownership? What gets you most excited about what these guys are up to?
Yeah, well, let me kind of dive into this recent acquisition they made. So they bought this company, NAM Offshore BV, and it's actually purchased from a joint venture from Exxon and Shell. Mm-hmm. Certainly some big names in the market, but they ended up paying about $246 million, or that's the planned payment, and it's expected to close about mid-2025. But where I think this really highlights management's ability to find prime opportunities is just the value add and value creation that this acquisition is going to make. So first and foremost, right off the bat, this company is expected to make about $98 million in free cash flow in 2024. But the big thing here is that the business is about $150 million market cap, and they're adding another $98 million in free cash flow to that business. So this is certainly a big add right there. The other thing is that this is going to add about 11,000 barrel of oil equivalent per day to their production capabilities. And then this translates to a 3.9 times increase in corporate production, a 3.7 times increase in 2P reserves, and a 6.2 times increase in 2P reserve value. So this just seems like a steal. And I don't know, again, like you said, it would be great to talk with Mr. Marino and see what he was thinking and what they were planning in this. But to me, it seems like they saw an opportunity to take an asset or a series of assets in a market they're already familiar with from a large competitor or alternative supplier. And perhaps when it comes to those, like whether it's Exxon and Shell, this seemed like a very small asset to them. But for a company like Tenaz, this is going to add substantial value to the business. And it really seems like a steal to me. So it's cool to see that they were able to jump in and just watch how this value will translate to the business over the long run.
Mm-hmm. Yeah, I mean, 3.9 times increase in their production is huge. They're going to be the second largest producer of gas in the Dutch North Sea. So mission accomplished. They're right on track with everything they said they would do. 98 million in additional free cash flow is honestly hard to wrap my head around for a few reasons. Like one, the fact that the stock is where it is. Like, I understand that in Canada, there's been a lot of risk aversion. I think generally speaking, people are just not feeling too confident on our economy and on our country in a lot of ways. And I think that's just frozen a lot of investment. A lot of people are just, retail investors anyway, are just not active like they used to be. And at the same time, Tenaz seems to be a fairly quiet company. I don't really hear or see anything from them. And we search far and wide for good stocks. And as far as I understand, I just haven't seen a whole lot out there. So sometimes that's all it is. You can't buy a stock if you don't know about it, which is part of the reason I love this part of the market, because everybody doesn't know everything. As we said in our last episode, when we explained what we look for in a stock, these markets are very inefficient. And what amazing example of a company that just is going to add almost $100 million in free cash flow, which is, similar to their market cap right now. The fact that that thing isn't going anywhere but straight up just shows that people just don't know this exists. So it's exciting for us to have a bit of an early move. Certainly feels like it. We've been there for almost 2 years now. And you were even calling him Mr. Marino. That is the ultimate respect. So if he doesn't appreciate that and get on the show, I don't know what else is going to do it.
I was just going to add one final thing. Again, just looking at the payback period of this acquisition, again, this is assuming that free cash flow will remain constant or perhaps grow into the future. But if they're making $98 million per year in free cash flow, and this is $246 million acquisition, that's less than a 3-year payback period for an asset of this type that is significantly going to increase the intrinsic value. So just another reason to be impressed by what they were able to accomplish with this acquisition.
Yep. And I mean, they're not done yet either. Like, they have a very good track record of being able to find assets that are profitable quickly too, which is important, and growing those assets and finding areas for organic growth in addition to their operational expertise, where they're able to kind of dial in the operations of whatever it is they buy. So hats off to you guys at Tenaz. We hope to see you on the show soon. We're going to keep following along. If you're watching, you want to chew into this a little bit more, which you should. Hopefully we have an interview for you, but in the meantime, we can send you over to some of our recent articles that you can take a look at. And as always, ask us questions. We'd love to chat about this stock. It's an exciting one, so we encourage you to. Declan, any closing words? I feel like we've done quite good on this. We've covered a lot of ground in this podcast. So any final thoughts before we wrap things up?
Nope. Excited to see how these companies play out over the next couple of weeks.
Beautiful. Okay, that concludes Micromath Capital Podcast, episode number 2. We're coming back to you every 2 weeks. If you have any questions or want to be involved in any way or be a guest on our show, by all means, comment below or send us an email and we'll see what we can do for you. So thanks for tuning in. We'll see you guys next time.